Hello, everybody. Welcome to Market Alchemist's YouTube channel. It is good to see everyone come in. I'm especially proud of our new people coming in right now because somehow we only have 4 watching, but we have 7 likes, which means y'all are really doing no, there we go. There we go. So y'all are really doing your job today. I like it. Well done, everybody. Good stuff. We have one job here. I'm gonna teach, you're gonna like, and everything will be good. So good to see everybody. Thank you so much for joining me today. I am I don't know, having kind of a blah day trading wise, which is okay because I had a great trading day yesterday. I closed out my trade yesterday, made around 10K yesterday, so I was really happy with that. But today, the call that I've liked today was YM. It was the one I've really been into. I've tried a couple of stabs at this one and have not been able to get this thing going. I think Friday is going to just be a little bit of a red day for me, probably. No big deal. I mean, with how great yesterday was, I we have these losing days. So, and the one thing you're not going to come to this channel is come in here and see someone who wins every single day because that's not my job, right? I'm a professional loser by trade. Right. So the main focus is on days when things aren't working that I manage my downside and make sure I don't do too much damage, right? So that in any one given day, I can't take it, I can't get it under control. So, we're in on, I'm in on YM. I took a small, and I'll show you. I took a small loss on my first attempt of YM, and then after we bottomed under the level, I actually liked the absorption better, and I was closer to this low, so I went long again, and then cut that one for a very small win, which kind of imbalanced my loss. And now I'm back in one more time. We're gonna try this thing one more time. I'm in here. There's an imbalance on the buy side here on the footprint. So I'm long here. I'm leaving my stop down here just to see how we do. But either way, like I said, I probably only end up a few $100. With everything in here, I'll probably end up about $600 or $700 in the red if it doesn't make it to where I want it to go. So otherwise, though, the market itself, if you checked out the market forecast, I said that today, will likely be a ranged day, and we're gonna have trouble moving. So far with the Friday, that seems to be fairly consistent. So thank you so much. Yesterday I traded NQ long yesterday. We had a higher narrow range and we swept the S3 to the downside. So I bought S3 and took it all the way to R4. I ended up cutting a little bit off of R4 because I wanted to go for R6, which was a bit greedy. So I probably, if I'd have cut it R4, I actually would have made like 12 or 13, which was nice. I ended up taking right around 10, a little over 10 after it came back and kind of came through a level I was watching, but it worked out really nicely otherwise. So I think that's really fun. So wow, we already over 100 people at 3 minutes into the thing. Way to go, people. 54 likes though. So 100 people, 54 likes. That means if you look to the left and you look to the right, one of those people did not like this show. Like, what is exactly going on here? Like, so anyway, um, I already did, but I'll show you again. The blue arrows are, you know what? I wonder if I can change that because I'm so over that actually. Hold on, let me see if I can go to I think it's canvas. Where are my arrows? Mine go, I wish there was a way that I could do green arrows. Oh well, different day. So entry, exit, re-entry, exit, entry, future exit. I'll let you guys see me take a nice chunky loser to close out the week. What do you guys think? Anybody want to see me lose a G today? Need a change. Oh, that's right. I can do it this way. Thanks, Frank. You're awesome. Okay, so Toby, I want to make sure like you guys real that we do like real trading stuff here. You know what I mean? I don't want to be one of those like because I'll admit to you over and over again, I do not have anywhere near a 100% hit rate. Actually, the trade yesterday that I got was one of my first really productive trades I had in like a whole week. Right? But when you're doing real trading, good trading, that's all you need, right? There's this expectation that you're going to win every single day. And I can tell you right now from from doing this for a titch, you know what I mean? That expectation will drive you to making no money, right? That expectation will drive you to making no money, right? And how do I know that? Because I did that. Right? There have been many there I spent many a time, right, having very green days with large green streaks that lasted longer than people could possibly imagine. And in those time periods, I made like very little, if not no freaking money at all. Right? So when I started allowing my win rate to be lower, but started allowing my profit rate to be higher, I finally found the balance that I was looking for. How do you get the numbers and the footprint? What do you mean? Which ones? Like these numbers here? Now we know you're not an AI. Hey, I could be AI generated. You never know. No. So let me just kind of break down what the footprint is. So the footprint is really fun, right? Because it's candle formation. Oh, we just found some buys. So let's look at this candle right now. Notice right now we have almost no sellers to this side. So these are all the sell prints. These are all the buying prints, right? So what we saw there, look, we had two large sell prints, but we did not drop the price when we had those two large sell prints, right? That would insinuate that we absorbed those sells and we had a bunch of large buy prints and all of those were allowed to go to the book, right? So that was an inherent, well, that close sucked. So but we saw a lot of buy prints and a lot of sell prints, but the buy prints they allowed to go to the book. The sell prints they did not. Whenever we sold, we stayed in place. So it looks like, at least for that moment, that the algorithm was choosing to go up for whatever reason. Right? So you can use these. So right now you have an area here where we had an imbalance of sellers to buyers. Down here, we have an imbalance of buyers to sellers. Here, we're creating an imbalance of buyers to sellers. So you can see right now we're buying more than we're selling. These boxes to the side here show you that at that level, we had at least a 300% larger amount of buyers than sellers in this area. So each one of the numbers to the side on this side are buyers. Each number on this side are sellers. So you can kind of see where our profit is. So this looks like we're starting to buy quite a bit. We had a sell there that they absorbed, but then they allowed the buys to go to the book. So this actually looks pretty strong right now. So I'd say we probably go up and we're going to check this selling imbalance. Now, notice the selling imbalance. Any of y'all like fair value? Watch this big candle right here. Oops, my magnet's not on. Watch this big red candle right here. Ta-da! And now we know what's causing fair value. Right? So this is why it's so important that we if we offer to this area and we do not find more sellers, we're gonna go up. Right? Because we're coming into this area of value where we had a lot of movement before and we had an imbalance of sellers. So if we're going to go offer any place to find more sellers, the algorithm's gonna offer right there. So the algorithm's going up to that area because the algorithm's looking for more sellers because we've run out down here. If we need to find buyers, it's gonna go down here because we had an imbalance of buyers. No, I haven't. The only thing that I've changed in my criteria because I'm trading full size contracts, GP, is that perfect explanation, that deserves a thumbs up, right? The only thing I've changed is my because I'm trading full size contracts, I don't allow as exaggerated of a pullback, right? So I'm a little bit more delicate in my positioning on with the larger contracts, but other than that, everything else is the same. The footprints haven't changed anything in the way I take trades. I'm actually trying to use these more so to educate you all, right? Because for me, I can read this using value and by reading volume and price analysis. But with the footprints, which I actually have started to really enjoy, with the footprints, I can actually show you, like right now, more. Look, for instance, this candle right here is a delta deviation, GP. Look, we had more selling than buying, but we closed a bullish candle. So, I mean, we had enough selling. If they wanted to sell, they could. Right, but they didn't. And I would not play NQ today at all. I maybe ES if we get to R4. So here we have more buying than selling, and we are going up, right? So this is very normal. That is not normal, right? We should have closed red because we were red, but we closed green even though we're red, right? And so that's bullish. So we went to this area where we found sellers, and even though we found more, we decided to buy it. Let's see. Faru. So for me, my criteria, which I'll kind of show you on YM here. So my criteria is not so fixed, right? So basically, what I need is the level. That's the most important thing. This trade actually is on me. I didn't have the level hit yet, technically, but since we were close enough, I decided to go ahead and take it anyway, which of course the market rewarded me with a small stop. Thank you so much, market. I then re-longed now that I had my call and it looked like we were bottoming in the volume. We then went down, hammered, and then went up. That hammer signal was really nice. And I may change some criteria with the footprint to help me spot these. But this was the nice hammer candle that I'm normally looking for. Big sell candle, but it closed as a hammer. That's a really nice entry signal right there. I was in a little early again, stopped, and then this reentry is perfect. I love my reentry. Right? Reentry was on the back test of S3, right? With an isolated pivot and then a new high. So this is I love my third entry. It's really lovely. So, but this is what I'm this is so but these are my entry signals. I'm looking for a level and I'm looking for volume that corresponds with what I believe is going to be, along. So really all I use is levels and volume. So that's why I like footprints so much, because footprints allow you to see where the volume is being distributed on the candles. So I can actually see if we're buying well or if we're selling. Like right here, we had a lot of selling on this candle, more than buying, but we didn't go down. So that's a deviation again, right? We had a lot more selling, so we should have went down, we didn't. So that's still inherently bullish to me, right? Um, Tim, that's a pretty good policy, buddy. AI generated shirt for sure. Um, why were you not good with the high win rate? Were the profits just too low? Yes. The high win rate, in order to have a high win rate, you have to have a low profit factor. This is just a fact. There is no way that I do not believe that there is any way that you can do anything with trading. I don't really think there's anything that works that's going to give you that's going to give you I don't think there's really anything that's going to give you a high hit rate and a high win rate or a high profit rate. This is one of the reasons why scalping is inherently dangerous, because in order to be good at scalping, you have to have a very high win rate and a very high reward rate at the same time, which is virtually impossible. So only the rare no go on platinum, at least not in the moment. It's above the level. It looked here, but we kind of discounted it because we had exhausted on the sell side. So I think this has been too much selling for us to try and short here. And since we're technically in a higher range, I would view platinum as being more bullish generically. So yeah, I don't know if I would really feel comfortable with shorting platinum. So high win rate. Well, high win rate's possible, boring, right? I ran a 80 to 90% hit rate for almost 3 years. And for almost a year and a half, over 1 year, I had a completely green day every single day. But I also only averaged 1 hour a day to a half hour a day to 2 hour a day, never more than that, because you can't have a high win rate and a high reward rate. It just doesn't happen, right? In order to be able to win, you have to be willing to lose more than you win. And that's why 90% of people fail from trading, right? They don't fail from trading because they lack talent or they lack the ability to be a great trader, or to learn the technical information or to read order books or read volume and price analysis. Everybody can do that crap. It's not rocket science, right? But what most people cannot do is follow rules. So one of the questions that someone asked is, Glenn asked, how long did it take for you to become totally disciplined in your trading habits? I think one of the key successes for me as a trader was the fact that that kind of came with the package already, right? Uh, I did have some trouble in the beginning with over trading and bag holding and blowing things up, but that actually came because of how I was learning to trade and the trading style I was trying to trade. When I started off, I basically started scalping using momentum and playing ORBs, and I just had my ass handed to me. I mean, like so bad. I'm not saying it's not possible. I guess I'm not saying it's not possible. But I think if you have a reasonable trading account, um, I think if you have a reasonable trading account, you know what I mean? You do okay, right? So, I mean, if you have a really massive trading account, then you can do that. Right? So, but I think my main thing was I'm very systems oriented. So I used to build lots of standard operating procedures in my previous line of work. So when I came in, following a plan, was really good. Now, there came a time a little bit later, and I'm going to talk to the Innovo. It is true that I got in a little early, but all the rules were met, right? I didn't have it hit the line, but hitting and actually setting the alert is not technically a rule of mine, right? For me, it just needs to be in the right area, and I need to see what I think I need to see. You know what I mean? But for me to call alerts for people that I would actually publish, it needs to fit that. And there are times, but again, if I had waited, I would have had one less loss today. So when I do lose, it is those moments in which, often that happens. So, but I should honestly, right? I should have waited for the call, right? So, and over time, if I started losing a significant enough trades that I made that happen, then maybe I would, right? But this is a perfect example where it would have at least saved me from a loss. You know what I mean? So, real shit, right? So I'm not gonna try and also I'm not a perfect human. But I do follow my rules. Like I would say, one of the things we track in Market Alchemist is what we call our discretionary threshold, right? So of all the trades you take, how many of those trades have, you know, enough rules? So like let's say if you have 10 rules, you should have 8 of your 10 available. It's almost so one of the things we want to really do all the time, which is a little difficult, is we want 10 out of 10 to be exactly every single time, and that actually doesn't happen either. So you have to kind of have, like, 10 rules, but you don't necessarily need to have all 10 in the same place. If you have all 10, then that's an A plus, but if you have, like, 9 out of 10 or something like that, 8 out of 10, maybe you can make a little discretionary movement there, but the better traders that I work with, they'll just rock with the 10 out of 10s, and they have really high discretionary index, right? So the vast majority of the trades that they take line up with the vast majority of the rules. And if you can, how you do one thing and how you yeah, fight back. That's so true, right? So yeah, the more you can, so I think inherently in the beginning, what really worked for me or helped me out quite a bit was that I had, I was really good at following rules. Now, because of that, because I was really good at following rules, I lost a lot of money trying momentum strategies. I think in order to trade momentum that well, you have to trade more emotionally, if that makes sense. Like, I think if you're a very emotional person and you don't like structure and rules, I think ORBs are going to likely resonate with you, but you're still probably going to lose a lot of money. I have not seen a single trader that I'm completely aware of that if you really put brass tacks like one to one, that really makes considerable amounts of money with momentum strategies, or sorry, not momentum, with opening range strategies, unless they have a very large account, and can afford to make smaller percentages. That helps a lot, right? So, but yeah, what was it that you said? Yeah, yeah, yeah. My background was in IT. I don't like the way you are teaching to take no call trades. So, Jose, let me address that. So, the best statement I have for that is, would you tell your dad how to drive? Right? When you're 16 years old and your dad teaches you to drive a car, he is not going to teach you to drive a car the way he drives a car. Right? He's gonna teach you the letter of the law exactly how you should drive that car in all case scenario. And then as you get older and you gain experience and saddle time, and you can actually learn when these moments are appropriate to bend, like when can you just not stop at the stop sign, right? When can you, even though it's a red light, you know what I mean? But there's no cars anywhere and it's 1 o'clock in the morning. Right? So then, you can get, you can start making these moments. So and that's mine. But in this instance, I think if anything, the demonstration shows you that when I tried to do that, it was not beneficial. Right? So, but I'm gonna always be honest with you guys because I'm not gonna claim to be a perfect person. I never will be. Right? So there was enough in what I saw to make me feel comfortable giving it a shot. Right? So, but now you're in a car with your dad who's running a red light. What do you think you're learning? Yeah, it's true. All right, Jose. If that's what you think. I didn't again, I didn't take the trade in the middle of the ether. It got within one tick of the call and it looked like we were about to start buying, right? So that's why I went through. So I don't think they are either, right? So, but we got really close to it. So, and that was close enough for me. But I do think for newer traders, especially, adhering to them the best is the best, and for me, I probably should too. Again, I admitted before I would have lost, so imagine your dad runs the red light and then he gets in a car wreck, right? No, I know I can't don't criticize, by the way. I think what Jose is saying here is perfect, by the way. I really love this interaction, right? I have no issue, right, having a true repartee here. I'm nobody special. I'm not a famous anything. I'm just here to teach you guys how to trade the best that I can. So, but I'm okay with that. I think it's great, and I really feel actually I feel rather how would I say this? I'm touched, right? I feel flattered that Jose feels comfortable enough in this environment, right, to feel okay with saying that for me. Right. So I really appreciate you, Jose, and you feel free to criticize as much as you want because I want you to be the best trader you can be, and I want to be the best trader I can be for you. Right. So no worries there. Like, please bring it on. Right. I don't have an ego like that. You're not gonna see me stressed out. I'm not gonna go home and cry about it. You know what I mean? Like I actually really appreciate it. So but and I agree with the cams. So I feel like it's appropriate to break even on a trade whenever we've moved in a way that I don't think we should come back. Right. So generically for me, like once we've bought through certain layers, levels, and we've moved a certain distance away, at this point, if it's started a breakout and then it stuffs and comes back in, these are all things we can utilize. Now, since my strategy is a range strategy on something like YM, I would prefer to just leave it alone. I actually don't really recommend moving to break even. But on since I trade full size contracts, there's really just only so much give I'm willing to give there. Otherwise, I'll get it out, let it settle a little bit, and get back in. But if I was trading, and especially in the beginning, I just let them rock. I think it's better, right? So, especially if I'm seeing selling occurring, you know what I mean? Where or it looks like we're not, let me get back over to YM. I'm showing you like platinum right now for no reason. Um, so like YM right now, right? YM looks like it's gonna go long to me. Short ES at S3 or R3, Fearless. If it's at R3, no, it's a higher range. You want R4. So notice this candle right here, right? A lot more selling, but we still closed up. So it's just I just see a lot of absorption whenever we try and sell. So I want to be long right around here, but we'll see what happens. This will be my last attempt. I can take up to 3. If this trade doesn't work, it'll be my last trade of the day. I can only take the 3 strikes and I'm out. Yeah, JR Trust, that happens quite a bit. So this is the if it goes kind of a concept, like, but and that does happen. For me, it's no, no, actually, each one of these, my first trade was probably only about like, no. I don't risk a percent of my account at all. I risk a significantly smaller amount on my account. My second trade right now, my first trade was probably around $600 risk, maybe a little bit more. My second one was less than that. I think my second one was no, my second one was a grand. The third one was a really nice entry. So the third one I only risked like 300 bucks. I don't always I risk about a quarter of my account. So if I had a full losing day where I took 4 trades in that day, I would I could lose up to a percent a day. But I don't trade I only risk about a quarter of my account. which is what I would which is what I would recommend for everybody. If you're looking to structure out and you're looking to consider how much money you should be making, oof, that was a lot of sell prints. And you're about how much money you should expect. I would never expect more than a percent out of your account, risking a quarter percent a day. If you're risking more than that, I would say you're over leveraging and you're going to risk damaging your account quite a bit. How would you advise beginners with 10K account just joining as new traders today? I mean, great account size. Depending on what you're trading. Are you trading futures, Hot Lava? Oh, boy. Could you talk a little and I'll come back to Hot Lava. I missed yours, boy. For the record, if I miss a question and it's been like 5 minutes or 2 minutes or something, you can always kinda spam it back in again. Just don't hit it like once every 30 seconds. But, if I it kinda scrolls, so if I miss it, and then I'll look at IREN. Um, let's see here. Where did it go? I missed it. Passive fundings on the new Apex rules, boy, has made it some of the funded passings on that. You may even want to look at like Lucid now, because Lucid also has trade of it accounts if you like them. And their rules are a little bit more slack. Um, what's a great percent for a week? I don't know, a few, 3% a week, I think is a pretty reasonable expectation. So on a day, I wouldn't expect more than 1. And if you had let's say if you really shouldn't make more than 1% or so a day. Anything more than that's just a little bit. I mean, I have some days where I make more, right? Like yesterday, I made more than 1%. Yesterday, I mean, with my risk level, I mean, I probably made closer to like 3 or 4% yesterday. But that's very but I would say on average, but I also had a very weak week. So thank goodness I had that big trade. I was very close to closing out this week red. So at the way the week was going for me, really wild one. So that one really well held trade yesterday totally bailed out my whole week and then some. You know what I mean? So, but I wouldn't expect more than like a percent a day, and I would assume you're gonna lose as many days as you win, if not the other way around. So, but if your 3 losing days are restricted to like maybe a half percent, but your winning days are making you a percent, right? Then you're gonna be at 2 or 3% by the end of the week. If you have a $100,000 account, that's some pretty decent money. Right, but a lot of people come in with, like, 10 grand and remember, the amount of money you have significantly impacts that idea, right? If you have a $10,000 account, it's gonna be very difficult to make with a $10,000 account, you could certainly make $600, $500 a day, if you had a really good day. On average, you'll probably only make like $100, right? Because that's a percent, right? So, but a lot of people come in saying, "Hey, I have a 10K account. I'd like to make $1,000 a day." That would be 10%. And there is very few professional traders in the world that can pull 10% days consistently. I would say there's none. Right? So, what I would do, and I think Innovo, really hit something here. I really, really like what you just said here. I think too many people are focused on the upside. I would recommend just focusing on your downside, right? At all times, you're a professional loser. You should always be focused on your downside, right? How many trades can you lose in a day? What's the largest amount you can lose? When it comes to your upside, why get in its way? right? Let your winners run, right? If you get a really good move, because what you'll notice is once a month, twice a month, sometimes 3 times a month, there's just this big trade that you got in on. You made maybe 2R on it, and that trade ran all freaking day. And I know how many people in here, give me a number one if that's happened to you. You got into a trade, you made like 1 or 2 Rs on it, partialed it, did your thing, and then by the end of the day, you just stared at it and you said, "Man, if I had have just not touched that damn thing, it would have been like the greatest trade of my career." That trade happens every single week, every single month, but we always let that trade go, right? The biggest change in my trading over the past year or 2 is that I do not let those trades go anymore. I treat every single trade as if it is going to be the big trade, and I have no idea which one it's going to be. Right? Like, it could be where I am right now. Maybe I stop out for like I think it's gonna be like around $600 loss, right? Maybe I stop out for a $600 loss, or maybe this turns into a 30,000, like, I have no idea, right? So and that's where being too focused or attached to the outcome is what destroys a lot of traders and trading positions, right? You know what I mean? Like, it really hurts a lot of traders. Because what ends up happening is they end up, the term is behavioral slippage, right? First off, behavioral slippage isn't the money you lose, it's the money you never make, right? But, it's a really just kind of a let it theory, right? So, the trade is going to win or lose, let it, right? Just let it do one or the other, like, who cares? It's not that big of a deal, just let it be a winner, let it be a loser, show it for everybody, have a good time. Right? Thank you. Just enjoy yourself and just let it be what it's going to be. You can't control anything. All you can do is isolate an entry that you feel comfortable with that makes sense to you, follows your rules, ideally, follows your rules, right? And then boom. You know what I mean? Make the decision and go. After that, you have nothing that is your responsibility. Your only responsibility is managing your downside. And if it starts going up or if it starts going in the direction, right? Let it. Give it the chance to be that ticker. And guess what? 9 out of 10 aren't going to work, but the 10th one's going to work. And if you just don't screw it up, that 10th one will make you all the money you need. And then you'll hit another one. It'll make you all the one you need. Right? So, let's try and hit a couple of these questions here. So first, IREN was an absolutely beautiful trending breakout call. It called it. It even gave a beautiful reoffer back near the level. Pivot long. You could have went long there, stop below the level. That would have been really pretty, and our target would have been right here at 40.26. That was our ATR target. Right through it and then reversed. Beautiful IREN setup today. I wouldn't have one. For me, this is done. I would not be long in IREN anymore. I would be out. We've exhausted. So here's the kind of the things I'm looking at here. Number 1, when we went up and broke ATR high, which is our projected distance, by the way, that we're expecting to go. When we broke through our targeted high, right, look how we exhausted our volume on the buying and selling detector at the same time. So we had too much uptick with too much volume on it. So it's very likely we were going to reverse from here. And then look at that dump off of it. What a beautiful signal. Oh, I love my buying and selling detector. Dude, YM, AKA Tura. Me too. I like trailing stops. Trailing stops are good. I think once you're in a well-moving position to the top side, I was using a trailing stop yesterday, right? I just trail key levels, right? It shouldn't come back through the open price. Okay, at this point, it shouldn't come back through pre-market high, right? At this point, it shouldn't come through that, and I'll trail those, and I use either footprints or I'll use volume to decide which one I like. Stinking ES. I was really hoping for an R4 short on ES today. We just never got the gas. All right, we did good today. So, no big honk in position here. YM's coming down. I've got my outs at 48,197. So if we go through 48,200, I'm out. I chose that level because we had an imbalance of buyers here. So if we go back down to it, we're probably going to run those levels. We'll just get out, and that'll be a red one for us today. No big deal, right? So the BSD told us a lot about YM. And this in hindsight, um, I'm out. In hindsight, this is the one I really should have stayed focused on. So always improving as a trader, even though I have it's my system, you know what I mean? I'm still always improving. So for anyone here who uses the buying and selling detector, what is wrong with YM? It's more obvious than you would imagine, which is why it annoys me a titch. It's selling. No, we're selling. Look, we sold at the open. We offered back. We started to buy for just a little bit, and then we started selling, and then we're lightning selling right to the offer, selling, offer, selling. Damn thing's selling. Well, there we go. Yeah, it's selling. I should not be longing this. I do use volume profile actually in a way. I just do it on the footprints. So these are all little pox here. They're in here. This piece of junk. Oh well. I got nothing I like now. So Tim Sears, according to CME, they were talking about May being a possible release for the for single equity futures. When I do the market forecast in the morning, what are you looking at to get an idea of when you're seeing the market heading that day? So that's going to be really hard to explain, Colin. So the market forecast, um, with the market forecast, um, that's the thing that I'm kind of putting out there that gives you kind of the use of my experience, if that makes sense. So because it's not really so clear as which one is which. So some of the decisions I'm making are based upon yesterday's action, the day before's action, and just how I've experienced the market over like the better part of a decade at this point, right? Now beyond that, I also use the ranges, right? So if we're in wide ranges, I expect to close inside, right, or to play value. And so you know what I mean? So if we're on a narrow range, I'm expecting to close outside. So on wide ranges, we play in. On narrow ranges, we play out. Right. So what I'm looking for is for me for that concept because of that. Right. I kind of get an idea like today we're in a higher narrow range on NQ and we're in a higher, wider range on ES. But I would expect us to play long towards R4 since we opened above the CP, right? So I don't like the idea of being a sell on the NQ right now, even though we keep selling a lot, because for me, we should play to here and then to here, right? We should not go to here first from this opening position. Opening above the CP, we should sweep up, then down. This just shows you how choppy the day is, right? But like right now, we're above monthly R4, so we're actually in kind of a premium range on the month, right? But again, we've just got two, like you can see how indecisive NQ has been. If anything, it's leading a titch on the sell side right now, right? So for me, like what I would be looking like if this right here went on ES is the one I was really looking for today. I was really hopeful that ES was going to do something a little more enjoyable. We had monthly R4 with R4 on ES right here. I still may be willing to play that if we don't sell too much. If we go through the CP, that kind of kills this play a bit for me. But I'd still be willing to let this rally out to R4 and then maybe around 1 o'clock or 2 o'clock in the afternoon try a short on it. I think we'd be a long right now off of monthly R4 on NQ, and because we're above the CP, I would expect to buy the CP then go up. I wouldn't expect us to go through the CP. Anything's possible, right? But normally on the stat side of things, we would stay here. We're also after 10:30, so if we broke low of day, we'd break our IB to the downside, which would say quite a bit. So if we can hold here and not go lower, we'll have a really nice potential for an RIB break to the top side. I trade everything through TradingView, but I don't trade equities right now. They work well. I'll be again. When am I not? Just full disclosure, it's just too much to balance. Like, trading different I just have basically a handful of futures tickers I watch, and those are what I'm trading for the most part at any time. And then I'm certainly willing to help you with equities. I don't prefer trading equities. I like trading futures. So that's what I focus a lot on. But I do trade, I traded equities for years. Futures just have better leverage. That was a little volume. So you can kind of see here on this candle, we've had a pretty decent imbalance of buying here. You can see we closed this candle and we opened it. We had some buys and they went straight to the book, and we actually closed this pretty bullish. So this looks like we're probably going to start buying, at least for a little bit. 3 buys here, they absorbed the sells. The one sell candle we had was quite truncated. Let's see what happens here. Ooh, never mind. That's a lot of selling that just came in. Almost a complete imbalance to buying. That's very weak. Jeez. So indecisive, this market right now. This is what makes look at this. Now you know why on these ranges I trade from up here or down here, because this is what happens when you're in the middle. One thing that I do that's really good with my system, right, is that the system itself is kind of sweet because it doesn't just tell you how to get into good trades, it also tells you which bad trades to stay out of. Right? So, like, you cannot if you were thinking about taking a position in here, I would say, "No, thank you." Yeah, it's Friday, it's the weekend's coming, there's a lot of political unrest and news all over the place. I just don't know if I see, like, us catching a good bid today or really a good sell today. That was green. A lot of selling on this look, almost twice as much selling already on this 5 minute. It's pretty aggressive. How they close this 5 minute candle will be a very big deal. So I appreciate everybody so much for hanging out today. Like I was really happy. Like, we got quite a good showing today. Also people were hitting the thumbs up really well this morning. I think y'all are awesome. Thank you so much for coming by and hanging out with me for my red day. I'm a loser, baby, so why don't you? No, I'm kidding. I think NQ is going to go long here, but we'll see. So when we sold really hard down into this area, found a lot of sellers they absorbed here, and then we bought, and then we bought, and we absorbed sells again. Never mind. Geez, oh, they're being a pain in the butt. They're doing a lot of they're every time it looks like they're starting to get some push, they went right up into this overabundance of sellers and it hit them again. But see again, look at all the cells here. They're still absorbing though. It still looks like a long to me. All of our cells are here and they're absorbing. And there's not that many higher buys. They just don't want it, man. This sucks. This is selling. But the absorption, this is again, this is why I hate this range. Like, just look how hard it is to read this price action in this range, right? Yeah, I lost my tries on YM too, user. Red day today, bubba. Remember, he who is not willing to lose cannot win, right? Get a little zen on this bad boy, right? Always remember, he who is not willing to lose cannot win. So it's very, very important. I still think this thing looks like a long right now, but whatever. The double break's a big deal. We have a lot of imbalance down here. So if we sell, we probably go back to 25.83. I just don't we shouldn't sell from here. Oh well. Oh, so what's everyone's weekend plans? What are y'all up to the weekend? I think I'm gonna take my son to go see the new Mario movie tonight. What do y'all think? I think that should be a lot of fun. Have a nice cold beer. I think I'm gonna do something similar maybe tonight, make myself one, but I think it'll be something a little bit more on the Scotch side of things. Yep, you're right. Still showing selling on the BSD. We're absorbing it though. Like we have selling, but for the selling we have, we can't go down. But you're right, we're still selling. Isn't it amazing how good this indicator is? Wow, Jason, congratulations. It's a ooh wee, there it goes. Man, selling and selling. Okay then. Watch them yoink this right back up. Again, there's a lot of selling. You didn't really go very far with it. I swear this thing's gonna be a long in a second. I know I keep saying that over and over again, but the volume here, like the way this is absorbing, the way it looks like the dang thing wants to squeeze like crazy. Like we have all these large candles, like this right here. That one was more buying than selling, and it closed upside down. So that makes sense. Buying, selling upside down. I guess that's selling. This one it absorbed though. I don't know. I'm just wrong. They got me today. They got me today. Oh, please don't say that, Invo. I'm really good at reading volume and directionality. So now we're this, you know what I mean? Like I don't. So this is actually fairly unusual. This is also why I normally don't play this price range. Like it's not like I'm in a trade on this thing, you know. Uh, the two of them trade with almost like no technical acumen whatsoever. It's like so different. Um, I mean, I love Brian Pesum. Don't get me wrong. He's an amazing guy. I love him as a human being very, very much. But have you ever seen his screen? ATR settings. This is something's different now. They're getting a lot more sells in now compared to the buys. So this is actually looking a little bit more like selling. I'm still reading a lot of absorption here, like they're stair stepping down. Maybe we hit the CP and then squeeze off of it, but right now we're selling. BSD says selling. We got all reds here, so oh geez. Well, if Trump's talking, that explains a lot. Um, there's my AAL. I think maybe I need to stay on the 5 minute. Because on the 1 minute, it's a little easier to get to not see it as well, but on the 5 minute, this thing is blood red on the 5 minute. Even look, this buy candle here back into VWAP stayed completely red on this on the delta. So this was a very weak buying candle, and then we offered. So I think maybe I just stay on the 5 minute. I think it's easier to read there. Awesome info. Good chatting with you today. All right, we tagged the CP. Let's see what they do with it. Let's see if all that absorption I was reading comes true. Telling you, I was reading all kinds of absorption in here. Like with the amount of volume we were getting, we should have pushed lower faster. So, oh, that'd be fun. Fearless. All right, everybody. So, I have something of an announcement to make for everybody before you all go. At noon today, Dr. V's first 1 hour webinar is going to be released. Dun, dun, dun. So, when we get off of this, we are going to have Dr. V's first webinar is going to be available for you on YouTube, and that is called Trade Like You Mean It. It is a 9-part series that is going to help you find your trader ID your personality and the things that you should. It's going to talk about strategy hopping, all kinds of other cool stuff. It's going to be it's 9 episodes, so it's an hour long webinar sliced into 9 episodes for you so you can watch. They're all going to be so as soon as noon comes in here when we hang up the channel here, we're continuing to so that you have good stuff to look at and enjoy. We're working on another one of my webinars already, so that'll hopefully be up in the next week. So we have our guy Francis is editing and slicing and getting all of these right. So I hope you all go in there and check on it. Yeah, if you watch the video and you want to comment, throw comments in there, we'll do our best to get in there and answer them. But otherwise, I hope you all have an amazing weekend. You can watch the video this weekend, a little toilet time. Just kidding. But really take this one good. It's a really good one, and I think if you really take the time to peek it out, I think you'll really enjoy it. So I know I watched it last night. And it was amazing. So I hope you all have an amazing weekend. I'll see you all on Monday. So talk to you later. Much love and keep it green, people. I'll talk to you soon. Bye.